Real estate, the oldest asset class in the world, and ironically, the least innovative in the history of asset classes. There's a project aimed to kind of flip that on its head and turn one of the most illiquid assets into the most liquid asset overnight, the Realio Network.
So guys, in this video, per usual, we're going to come at you with the high quality fundamental analysis. And I must say, we tried to, and I normally don't do this, I tried to do some research on YouTube, watch some YouTube videos on Realio because I was going to the gym. And all I found was price predictions, technical analysis. So if you're watching this and you made a video on Realio and you're a content creator, we're talking about you. Your video, all it talked about was price. It didn't give any fundamental details. So we're going to go through the white paper. We're going to go through the team. We're going to go through the tokenomics. We're going to talk about how we see this thing actually fitting in, the problem that they're actually aiming to solve. And we'll let you guys know if we're buying it or not.
And although I am a licensed financial advisor, this is not financial advice.
Yes, these are our own opinions and research and perspectives. Always do your own research, even though this video is going to go through pretty much most of it. But this is just planting the seed. Just use this channel as a starting point.
And kind of piggyback off that comment real quick before we jump into it, I feel like we have a duty at this point to kind of protect the viewers. And although I don't know if we're the best yet, only time will tell, but we definitely do our best to bring you the best information in a fundamental and technical way so that it's easily digestible. And also we get into the thick of shit too.
Let's get into the thick of it.
Let's do it.
All right, you want to start off with what is private equity and the problem that they're aiming to solve, all that stuff, and we can dive into the white paper?
Yeah, so just to back up a bit, so Realio Network, they're designed to pretty much tokenize, track, and manage assets in any class across many markets. Their primary focus is real estate private equity. Now, I'm going to break down what private equity is really quick. So a lot of people get private equity and venture capital kind of confused, or they think that it's one and the same. And so the biggest difference between those two is that venture capital focuses on the startup environment. Private equity usually focuses on companies that already they've been around for some time, and it can happen one or two ways. The private equity fund, they could come in and buy a chunk of the company or buy the entire company. And obviously the goal is to basically flip that company on its head, get some gains, and sell your equity for a profit at some future date. So essentially, it's just that you could look at private equity as a fund that's usually built by accredited investors or larger institutions. And they specifically, and it could be public or private. A lot of the times it's in the private space. You get more private equity in the private space versus public markets, but it could be either or. And as I just mentioned before, it's all about profit. And so they can come in and buy, let's say 20% or a division of a company that isn't the main division of that company. They basically give it an overhaul, whether it's employees, operations, or the way they function in general. And later down the date, as I said, they're looking for a profit. And so Realio Network has brought that concept to the blockchain and in real estate. And as I mentioned in the intro, it turns one of the most illiquid assets into the most liquid asset overnight, or at least it competes with the most liquid assets. And to be clear, a lot of the YouTubers that, I only watch one video on YouTube, to be honest, but I'm assuming they're all going to say, it's a real estate protocol, it's a real estate protocol. They're flipping real estate on its head, and not really. So you could tokenize and track any asset class within the platform, and there hasn't been a lot of focus in terms of RWAs on the real estate space. And Realio Network has found a way to become regulatory compliant on the security side, while also allowing individuals like us, retail investors, to participate. Let's be clear, it's not built for you, but it's built for your benefit. It's built for the institutions, but it's built for your benefit. And so they did a good job at kind of making that seamless. So I'm excited to get into this one. And you can kind of see in the name, I feel like that name, not misleading, but it can make you think one thing over the other. So Realio, it makes you think about real estate. But I think it's actually play on the real world asset narrative and not just real estate. And so keep that in mind throughout this entire video. So although real estate is going to be their biggest play, the platform can pretty much tokenize and track any asset.
So it goes on to say here, there's currently a massive opportunity to capture value within the private investment marketplace with disruptive technology, aka blockchain technology. Given this market's high friction, lack of transparency, illiquidity, and complicated regulatory environment.
i.e. real estate.
Yeah, at over $7 trillion in size, the global private real estate markets are primed for change, essentially.
It's one of the slowest moving markets in the world. And that's from the transaction level. As you guys know, I was a real estate wholesaler for 5 years. And so although I technically own properties, but it was like the most at 4 months at a time, because my goal was to flip. It was to flip it instantly. So from the transaction level all the way up to the innovative level in terms of the abstract capitalism tools that we have, one of the slowest moving markets that we have.
And the largest, which kind of makes sense. A large ship doesn't move as fast as a jet ski. But that doesn't mean you can't put some turbochargers on that motherfucker.
Yeah, it's funny because yes, it can be looked at that way, but real estate is so granular and market by market is different. That's why even national real estate data sometimes doesn't give you the full picture. And it's appropriate to go market by market, meaning state by state, or sometimes even city by city within a state, because they can vary so much. And so, for example, King County in Washington, I was working on a development there. It was going to take us, an extremely long years and years and years to get a permit to put up these modular homes. We were building modular homes. Now, in Arizona, for example, we were building in a small town called, I actually forgot the name to be honest, but it's up near Show Low in Arizona. If you guys are familiar with Arizona, it's a small town. The regulatory side there in terms of getting permits, it was going to take us no more than 24 months. And so they would vary by market. And so there should be more innovation in the real estate space, especially on the local level, but we really just haven't seen it.
Yeah, to compare that example, you're saying looking at it different. On a cruise ship or on a ship, you got your suites, but you also got the jail at the bottom. So
what does that mean?
Tell
us what that means in the comments,
guys. It's still within one thing. It's still like its own thing, but it has its own silos.
I see what you're saying.
Yeah.
It's so local though. My real estate guys, you know what I'm talking about.
Yeah, my ship guys, y'all know what I'm talking about. No, I'm just playing. All right, so here we are, getting into the nitty gritty. We're on page 9. It says here, private markets suffer from slow execution, lack of transparency, limited liquidity, resulting in a higher cost of capital. Most legacy financial systems use practices that have not evolved compared to our data-driven world. Legacy institutions have financial incentive to maintain this inefficient status quo. Guys, in any economy, people are going to follow the incentives, whether that's good for people or bad for people. And it just so happens that in this industry, in real estate, things are set up to essentially not evolve. So they're trying to tackle an interesting kind of problem. I wouldn't say it's a hair on fire problem, but it's almost like your hair is on fire without you knowing it's on fire.
I'm not going to say all, because I know some projects that are innovating in the space and they do a good job integrating the TradFi with the blockchain world, aka Proppy. Yeah, but most of the innovation has taken place at the high capitalistic level, meaning the mortgage-backed securities and all those esoteric abstract tools that we have to extract value from the physical property itself. And so it's a reason that the BlackRocks, Fidelities, it's a reason that they only have access to these tools. And you can't just go buy some mortgage-backed securities. For one, you can't afford it. For two, the barrier to entry, you got to know someone, really. And so most of the innovation has been taking place at the top level, and there hasn't been much widespread innovation at the local level, as I just mentioned.
All right, guys. So they go on to say that to address these growing technological imbalances in private markets, they built this platform as a digital investment platform combining blockchain solutions with institutional quality investing and assets previously inaccessible to many investors. It says our platform enables digitized issuance of securities, transfer and tracking of ownership, and regulatory compliance. Our secure distributed infrastructure provides a brand new, instantly accessible, global and borderless peer-to-peer marketplace. So just to sum it up, their value proposition is these 4 bullet points. So modernizing custody of assets, how they're issued, analyzed, and exchanged. Lowering costs and removing friction by automating trust and disintermediary unnecessary third parties. 3, improving access to and quality of data. And 4, introducing the potential for enhanced execution and increases in liquidity.
One of the most pointless intermediaries in the real estate space is a broker, in my opinion. Yes, they have their use case in terms of education, But with a lot of these guys who they already have a great understanding of real estate, they don't need education. And a lot of the times, these commercial real estate brokers, unless they're dealing with someone who's new to the game, that's where their value really shines. But here, they're kind of just like button pressers, and then they'll generate 3 to 5% on that sale, which, if you're familiar with real estate, every dollar matters. It eats into your ROI, it eats into your cash on cash, it eats into every metric you use to track your ROI. And so it's important to either try to mitigate what you pay them or have a product like this in which the platform itself could act as a broker. And also it can act as a title and escrow service. But I'm not one to say we don't need title and escrow. You absolutely need them. We can just change the form of them, which is, once again, the company Properties doing. But this is not a property video, so that's my last time bringing them up. And so this is kind of like that one-stop shop all in one that would take out the intermediaries completely.
All right, so now we're getting more into the actual product. So it says, as an end-to-end solution for digital assets, we designed the platform from the ground up, starting with custody and storage. It's important that we create a secure yet easy to manage system for users to access both fiat and crypto assets. From a regulatory perspective, we chose to integrate an institutional quality custodian for fiat accounts while giving users non-custodial, aka control over your funds. You can send them on and off the platform. Crypto wallets for use with peer-to-peer marketplaces. So they go on to talk about their multi-currency wallet. So they have their USD wallet and fiat on and off ramp. So an investor has to pass the KYC, and then they're given US dollars in the account on the Realio platform through Prime Trust, which is their custodian, a very credible custodian. And this enables a seamless fiat on-ramp via ACH. And then they also allow you to do the same thing with cryptocurrencies. And then they also have their cold storage. So after tokens are purchased, you can also allow them to have them stored in Prime Trust via cold wallets. I'm sure you pay a fee. So just like with my hedge fund, I have a institutional Gemini account. I can choose to just keep the funds on the exchange, but those are normally hot wallets, or I can pay a fee to have them stored via cold storage. But you just have to keep in mind, you have to pay gas fees to send them back and forth, and you have to pay a custody fee.
Yeah, and to be clear, so I'm sure, I believe they don't use Prime Trust anymore. I think they use a company called Fortress. I'm not entirely sure though. But I know they don't use Prime Trust anymore. This was written in 2020. They have since updated. But either way, they're still using an institutional grade custodian. And just to touch on the KYC portion really quick, I know a lot of people shit on companies that have to implement KYC. But guys, at the end of the day, these are the moves that you need to make to bring blockchain technology into our world in a way that we've envisioned. Of course, we're going to have decentralized projects in the future. And of course, we're always going to have projects that they will never, ever build something centralized. They're always going to exist. But in order for blockchain and all these protocols to be integrated into the TradFi system, you need some type of regulatory compliant framework. And you know what I'm not sure of? If retail investors need to go through KYC AML just to own the real token. I doubt it, because you can just buy it on Uniswap. And so I doubt it. And so that doesn't apply to me and you. That only applies to, and we're going to get into the 3 tokens, but that only applies to the security side of things. So let's keep that in mind throughout the video as well. So don't shit on them immediately because you see KYC AML.
Yeah, and guys, you have to keep in mind, they're talking about like multi-million, billion-dollar,
trillions.
Transactions, accumulatively.
Okay, I see what you're saying.
So it's like, you have to know who a person is. Like, even when you're buying some real estate, it's a person's name on it. These aren't just sending and receiving tokens. Like, guys, this is best for, like he said, the advancement of the space. But also, as investors, this is the best way we're going to get our bags pumped, because it's a lot of institutional on the sidelines that is waiting for not just regulatory clarity, but KYC clarity as well. Because, like, I understand wanting to have privacy, and our generation went through 2008 and we saw so much manipulation happen in our life. But guys, we have to draw a line in the sand here. At some point, there needs to be KYC, AML, and all that stuff. It's in all of our best interests. No matter how good or bad something is, it's always 2 sides. So it's going to have its pluses and minuses for decentralization. It's going to have pluses and minuses for things like this that are centralized. All right, now let's kind of get into the actual Realio network. So it says it's a multi-layer solution designed to allow the coexistence of regulation and decentralization by providing layer 2 issuer controls in a modular chain agnostic protocol. Let me break down that sentence. So multi-layer means there are layer 1 and a layer 2. You can think of it that way. And when they say coexistence of regulation and decentralization by providing layer 2 issuer controls, so guys, you can build a centralized project on top of decentralized infrastructure, just like this project is built on like Ethereum and other blockchains. I don't know if all those other ones are centralized or decentralized, but you get the point. But you cannot build decentralized projects or infrastructure on top of centralized infrastructure. So that's kind of what they're hinting at here. And then in regards to modular chain agnostic, so modular basically, just think of division of labor. So there isn't one person in society that does everything. Like you have people who take out trash, you have people who lead teams, you have CEOs of companies. Like it's basically specialization, just like you have layer 2s that are designed to do the execution on the blockchain. So it frees up block space on the layer 1, and the layer 1 is best served to, come to a consensus. And then you have shards that's best for like storing things on side of the blockchain also, so that frees up the block space. So when they say modular, they have these 2 layers, and the layer 1 is optimized for something that we're going to get into, and the layer 2 is optimized for something else. And then when they say chain agnostic, it just means that it's able to work seamlessly on the chains that they're connected to.
Yes. So in modular, like let's take it a little further, you can look at it as like a plug and play protocol. So modular, you can look at, it comes with a set of tools that are readily available for use. Now it's up to you if you want to use it. For example, you can add the module for documentation. You can add a module for a certain smart contract. And so modular in this case, you can look at it as a plug and play system. And so pretty much whatever that institution needs to have their operation function appropriately, they can go ahead and add that. And I'm sure because of the flexibility of blockchain and the centralization of Realio Network, if there was high demand for a certain module that didn't exist within the Realio Network, they would just go ahead and create it.
Okay, so just moving forward here. So it says by standardizing the asset creation, issuance, and compliance function in a single protocol, the tokenization of assets can be accommodated on a number of layer 1 public permissionless blockchains utilizing shared standards and technical specifications. So the reason why the tokenization is happening on the layer 1 is because that's the most secure layer, and that's where you want your real estate, which is the largest major asset class in the world. Like you want that on the most secure layer. And this goes back to what I was saying, like for consensus, like, you have these layer 2s and these shards, but the consensus mechanism is always going to happen on the layer 1. And the layer 2s, like you hear about ZK rollups and optimistic rollups, they're designed to roll up the transactions, compress them into the smallest packet of data possible, and then submit them to the layer 1 so that the layer 1 can come to a consensus on if all of those rolled up transactions are true. And the reason why it does that is because, like I said, the consensus mechanism is telling you what's true. The layer 2 is designed specifically for speed, right? So hopefully that makes sense. So now they go on to say the Realio issuance network is a distributed ledger of independent parties who share an aligned incentive in the development and growth of the ecosystem. It says it's comprised of various validator nodes represented by entities as the foundations behind the various supported public blockchains on the Realio platform. And they go on to list some of the validators: Fusion, and Algorand, broker-dealers, other issuance platforms and issuers, asset managers, private equity funds, financial institutions.
Hedge funds.
Yeah, hedge funds. So basically, if you look at Bitcoin, it's almost like, I remember I checked like a year ago. I'm not going to check right now, but at one point when I checked, it was like 11,000 different nodes. So you can look at that as a dragon with 11,000 heads. And even if if you cut off all the heads and even one of them still survives, the whole network can still survive if nodes come back online. So it's the same kind of thing here, but it's just that the members are just like the Bitcoin network. You have people mining Bitcoin because they believe in it. So they're most likely, like we were talking about incentives. Incentive says, hey, I invested all the money in this these mining equipment, this building, hiring security and all this. So I'm going to verify legit transactions because I don't want my tokens getting slashed. So it's kind of the same thing here. The validators are all people who have vested financial incentive to make sure this thing works.
Last thing I'll say in terms of how innovative this project actually is. So I'm sure you guys are familiar with REITs in the public market. For example, real estate investment trusts. They have optimal liquidity because they're a public company or a public REIT. Now, REITs are just trust, hence the name, real estate investment trust. And so you got more private REITs than public REITs. And so now what this allows them to do is basically obtain the liquidity status of a public REIT without going through the hassles of becoming a public REIT. And so, I mean, this right here, I can see the demand for larger entities being very, very high. Of course, that depends on if they're still around when we really get to that point, or if they continue to be the number one project in terms of real estate tokenization.
All right, guys, and they have this cool diagram here. These are all of the, like they were saying, like they're chain agnostic. These are all of the chains that they plug into right now. And this kind of shows the tech stack. And they also have their own decentralized exchange where you can trade back and forth with. And, you know, these are all of the touch points here.
And it's a reason they partner with all of these chains, by the way. I believe they're going to get into it in the white paper. But each chain serves a specific purpose to the Realio network.
So they go on to talk about here, it says most platforms specialize only in tokenizing on Ethereum. However, Ethereum is plagued by network bottlenecks and a lack of ability to scale, while there's a growing consensus in the industry that Ethereum is not an ideal fit for digital securities. And that's why they, you know, use all of these. And they even talk about like Hyperledger and Corda.
I believe that was like a subsect of, or at least it involved JP Morgan and a bunch of other banks, R3 Corda. That was a consortium that was like, I feel like it was really popular years ago, as well as Hyperledger as well. These are institutional consortium blockchains.
Yeah, so it's like, I like the concept of looking at blockchains as cities. Just like you have internet browsers, like for specific purposes, you know, Internet Explorer, Safari, Google Chrome, etc. There are going to be blockchains that specialize for certain things. So there's going to be a blockchain, in my opinion, in the future that is best for DeFi, one that's best for NFTs, one that's best for certain kinds of transaction, tokenization, etc., etc. We don't know how all those are going to play out, so it looks like they're placing their bets on which ones they think are the best for this project and just kind of letting the chips fall where they may and adapting as time goes along.
Maybe we need to leave a thought in the comments. Maybe we do a video on Securitize. That's the company that's partnered with BlackRock for the tokenization side of things.
We should definitely.
Yeah, so maybe we'll drop a video on that soon as well.
All right, guys, let's keep moving on here. So they're doing things a little different. Like we said, this is a KYC. We're going to get into like the 3 different tokens they have. But it says here, Realio is developing a new security token standard, limiting ownership of the token to verified investors who have passed KYC and AML checks, while building in other regulatory items to address secondary market trading. The token may only be held and traded in a compliant manner as set by the issuer on the network based on which exemptions from registration were used or which jurisdictions were targeted in the initial offering. And then down here it says, developed in Hyperledger Fabric, the Realio Compliance Protocol facilitates governance and legal security, providing multi-jurisdictional, meaning multiple places, compliance globally with the focus on US SEC exemptions from the registration under Regulation S and Regulation D. So they're taking the regulation portion really seriously, and that's what's going to be the most attractive thing to institutions in addition to the security. Normally, when you do something like this, you have to make sure you're regulatory compliant, but they're creating an environment to where all you have to do is show up with your assets or your fund and then, you know, do the KYC, and then everything you do is already compliant and you don't even have to worry about it. Because you have these companies spend hundreds of thousands of millions of dollars to make sure they're compliant, and it takes a long time. So by them having it already set up, it eliminates that whole headache.
And I guess that makes sense why they would take it so serious. I mean, when you're dealing with real estate, so real estate is one of those asset classes. If you buy a house wrong and it fucks you up, it's probably going to take you 10, 20 years to get back unless you a straight hustler like me. But no, it's going to take you, 10, 15, 20 years to get back on your feet. Because you're talking about hundreds of thousands, possibly millions of dollars just on one house. And so if something goes wrong with that, it could go south. So imagine having a basket of them. So they can't have anything go wrong. And so the regulatory side of things was, I would assume when they met in their office every single day, they at least talked about regulation for like a half an hour every day, every single day. Well, that's only if they spent 1 hour together. So half of the time they spent together, they discuss regulation. That's how big this is, because you cannot mess up when it comes to real estate. You can't. You really can't mess up. You got to do it right.
So getting more into the product. So it says assets on the product or assets on the platform essentially are tokenized and issued through the network where everyone's KYC'd inside this walled garden. And once approved by the members, aka let's say you tokenize some real estate and the members say, okay, all these documents look good, it automatically gets posted to the issuance portal for purchase by whitelisted users. So now the decentralized exchange or the marketplace that they have, once it's approved, if you want to purchase a piece of real estate, now you can do it.
Do you want to explain what whitelisted is for our audience?
Yeah, and whitelisted basically means they chose you as a wallet address to be able to have the right of first refusal, essentially, like the right to be able to decide if you want to buy it before everyone else gets to. Then it says once the new issuance is onboarded and submitted for approval, the rest is automated and issuers can track progress on their dashboard. So then post issuance, it says the network stores and tracks transactional data and ownership transfer, updating cap tables for issuers in real time with verifiable data visualized through a user dashboard.
Cap table just shows who owns what and how much.
And then it says through the use of our native stablecoin, which we're going to get into, or any other crypto asset, profit distributions can be easily automated from the issuer's operating account. So now let's get into the tokens that they have on the platform. So they have 3 tokens, RST, RIO, and then Realio USD, which is their stablecoin. So RST is issued as a security token to represent ownership of the Realio ecosystem. The security token represents an investment in the platform and ecosystem and offers a revenue stream in the form of a profit share. And then it says holders of over 10,000 RST, which is why this project sent BlackRock 10,000 RIO tokens. So I'm not sure.
You need to participate in the RST though.
Okay. So it says holders of over 10,000 RST can also run a node on the Realio network to validate transactions while also earning block rewards and additional revenue from issuance fees paid out in RIO. So this is almost like a dividend paying stock, but it doesn't just pay you dividends, it pays you other kind of rewards too.
Yeah, and I would assume they generate most of the yield from the private equity investments in real estate that they have garnered. So I would assume they're heavily reliant on the yield they're generating from the asset that is underlying.
Yeah, and it says the RST token fund will own 100% of the Realio technology platform in the network and have a maximum supply of 50 million RST tokens. So essentially you have to be KYC and get approved to even be able to buy this. Like you can't just go on a decentralized exchange or an exchange and buy this. Like never, no matter what.
Not built for you, but built for your benefit.
Yep. So now let's talk about the RIO token. And this is the token that you would buy if you want to be able to benefit from the price appreciation from this project. So this is the utility token and it's used for the network and the platform. There was no ICO sale or pre-founder, pre-mine associated with RIO. And the mechanism, it says, was designed to be 100% fair to anyone interested in the ecosystem. The maximum supply of RIO will never exceed 100 million. And the initial circulating supply of 7,070,000 RIO issued during the airdrop will be the total supply until block rewards / market maker rewards begin distribution on the Realio network. So we're going to talk about the tokenomics here in the bit as well. So it says platform fees for tokenizing and trading will be paid in RIO. There will not be any trading fees for market makers on Realio X, which is their decentralized exchange. So basically what they're saying is like normally market makers make trading fees in the form of like when you go on Robinhood and you buy your stock, or you go on Coinbase and you buy crypto, the fee that you pay, most of it goes to market makers because they're the ones supplying the liquidity, the inventory of security stocks or cryptos that you're buying. And they normally get paid transaction fees and whatever the user's paying. So if a user is buying crypto with United States dollars, they get a fee in United States dollars. And on Uniswap, if I supply like Ethan USDC in a pool, I get paid in Ethan USDC. But what they're doing different here is that they're only paying out market making fees in RIO. So I'm wondering if this company if RIO is like pocketing the transaction fees that they're charging the users and they're just giving the market maker's RIO token. But I like these tokenomics. Like at first, when I was first just reading into it, I was like, oh, they're shitty because only like 7% of the tokens are on the market. But the remaining, 90 whatever percent, it's not like VCs are holding it and it's going to get dumped onto the market. It could get dumped onto the market, but it's getting paid out to the market makers, to the people that's helping the liquidity in the project, because they're trying to make real estate a liquid asset. And in order to do that, you need some liquidity so that you can advance cash while this transaction is taking place. So they're going to pay them this additional RIO that hasn't hit the market yet, the 90-something percent, is going to go to the market makers, and there aren't any token unlocks, and that's why you can't find it when you look. I went on CryptoRank, I went on Token Terminal to try to find like the supply issuance, and I should have read the white paper before I did that, but yeah, it makes sense why it's like that.
Yeah, and you know what? I'm not sure how inflationary that is, but the inflation aspect is extremely mitigated. And so when you get price appreciation, you're going to get some real appreciation in RIO. I would say it's damn near, because you got the speculative side as always, it's like almost more deflationary than inflationary, that they don't have any, you can't unlock them, and that they're only generated in the form of fees.
It only get dumped once the market makers that are earning the fees, if they decide to sell them.
Yeah, and that's why they're essentially able to pay out to the market makers 100% of those fees versus whatever else it would be.
Yeah, because they kept most of it for them. I haven't seen a tokenomics model like this. This is the first, but I like it. So they go on to talk about the utility function of RIO. So payment of asset tokenization fees. So if you tokenize something, you pay your fees in RIO. You can delegate a stake with a member organization to participate in block rewards. So if you want to stake it, holders of the original 10,000 airdrop RIO will be invited to a private sale of RST. That's pretty cool. And then in order to use the decentralized exchange, pretty much use the platform and buy tokenized assets, you have to stake RIO, and that also helps with the liquidity. Man, they thought about this a lot, man. Props to the team. And then it also says users, here it is. This is what we just said. Users must also stake RIO to become a market maker and earn market maker rewards. So guys, they have a lot of incentives to basically make it so that this token is not getting sold. I think it's genius.
So yeah, once again, it's like more inherently like deflationary for the price of RIO token specifically versus inflationary. Although they will be dumped onto the market, it's the form and time frame at which they are dumped.
All right, guys, the last token is Realio USD, which is their stable coin. So it says it's a stable coin backed 1-on-1 with US dollars held in an account with Prime Trust. And then it says RUSD tokens can be purchased with and redeemed for US dollars with KYC and AML approved accounts instantly on the Realio platform.
Yeah, and I don't think RUSD, which is their stablecoin, I don't think it's really going to be used by retail investors. I think that's more going to be used by on the institutional side of things. So that's where it makes sense. It makes no sense for me to buy their stablecoin, to be honest. It makes no sense. I would just rather buy USDC. But if I'm a participator in the network, and I know I'm going to invest in, whether I'm buying a fund or investing it or seeding a fund, it would make sense for me to park capital in RUSD, so that way when I'm ready, just get it done.
Yeah, and I agree with what he's saying as well. It's definitely going to be used by institutions. One, most retail investors aren't going to be in this, except for the original 10,000 that may have got airdropped and they get some RST, but they'll probably just sell that. But if an institution wants to go and onboard, the Realio token is going to be volatile. So they're probably going to want to hold the USDC while they're looking at assets on the platform that they want to purchase. Because a lot of times they're not just going to, institutions move slow, most of them. They're not just going to put the funds on the platform and ape in unless they already had their eye on something. But you can't have your eye on something without either knowing someone who is in the platform and told them about it, or without being approved first. All right, guys, now let's get into the actual platform. It says the Realio platform provides users with all services in a single secure applications where assets are listed for investment and traded peer-to-peer. Tokenized funds can also be managed throughout their life cycles on the platform. Asset owners may join Realio to leverage this platform and services to create special purpose financial vehicles with tokenized equity. The Realio platform consists of a web-based platform and a mobile app where users may easily tokenize assets and or create their own diversified investment portfolio. Initial functions of the web-based platform include user accounts, which have to be AML and KYC approved, They have the wallets with the fiat and crypto on and off ramps. The investment portal where you can, see what you can purchase. Portfolio management where you can see all your assets. And then the actual issuance portal where you apply to become an issuer on the network, create and launch custom tokens utilizing the Realio blockchain infrastructure. All through a mobile app. Tokenizing. Imagine tokenizing a hotel you own, or tokenizing a house. Maybe you just take a picture, you submit the deed that you got saved in Dropbox or something, all on your phone. That's crazy.
Yeah, no, it actually is insane. You could do it through an app, guys. I mean, I've been talking about tokenization of real estate for, I don't know, years and years and years. And so to see someone accomplish what they've accomplished and they have an app, it's not just the protocol itself. I'm going to be honest. The app aspect is pretty insane that you can tokenize real estate through an app these days.
There's going to be people who have this and they just got to get a notification on their phone like, oh, your building was just purchased for $2 million. It's like, oh, that's cool. And then if you look at the team, they all have experience in either real estate, business, developers, like creating a mobile app. Like the team has the perfect experience for the protocols. A lot of them have degrees from, pretty credible universities. This one, 10 years of software and mechanical engineering.
Florida, I don't know.
So yeah, guys, like the team is the most important thing. We've already looked through them, so you guys feel free. We're not going to break down each individual person, but I like that they are docs because some of the worst purchases that I've made in recent history have been from people who I never saw their face. So I like that they're putting their ass on the line so that if some shit goes wrong, they can all be held accountable.
Yeah, we talked about this months ago in the vid too. Avoid anonymous projects.
Yep.
Even if it's a ZKP project, you want to know who created that shit.
All right, guys. So this is the website. So in order to register, you obviously, have to get KYC'd and all of that stuff. They got the products. They have their blog. It's just a simple site. They got some of the press releases that they've been in, a way to get in contact with them. And then this is the website for the actual network where, they pretty much talk about all of the stuff that we went through in the white paper. We're not going to be able to see much because obviously we're not registered with this platform. But if you click launch app, you can see the bridge. So you can bridge over there. You can stake your RIO tokens, which, it's not live yet. And then govern it. You can stake your tokens and be able to have a say in how certain things in the platform work. So it looks like they're, developing the standard DAO model. And then if you look here, it's on Dune Analytics. You can see some of the analytics. So it's over 22,000 holders, token supply, market cap. You can see the transfers, everything, the holders, everything is trending upwards exponentially. I mean, obviously BlackRock just announced their RWA fund, so this is pumping with that. And this project's been around since around 2020. You have the Realio LP on Uniswap. Volume's been down, so that means people are still sleeping on it. Guys, subscribe to my channel, Crypto Noah. I'm gonna make on showing my take profit strategy, how you can turn a very small amount into a very large amount. The price appreciation potential on this project is fucking huge. I'm gonna be honest with you.
Pretty huge.
And I'm gonna show a yield farming strategy on how you can provide liquidity and accumulate Realio passively so you'll have more to sell when it does go up.
And guys, if we're talking about a $16 million market cap currently, and we are still relatively tight in terms of monetary policy, and real estate is your underlying asset, one of the most interest rate sensitive asset classes ever is real estate. I would argue it's the most interest rate sensitive asset out there. And so us getting ready to go into an easing cycle in terms of the Federal Reserve with monetary policy, i.e. cutting rates, real estate is going to do well naturally. Now, when it comes to RWAs, most assets, if capital is more easily accessible, i.e. cheaper, that only creates an appetite for individuals and accredited investors to kind of flock towards them. And although some people think we're going to get to the zero bound again with monetary policy, we're not. But that doesn't mean you're not going to get any crazy bullish action within the RWA narrative. And we've been discussing this for a long time, guys. And, it's just, we're getting more validation from the markets in that, okay, RWAs, we knew it was going to be a pretty big narrative. I think is actually happening a little faster than I anticipated, actually. I didn't anticipate things to pump how they are now. I didn't anticipate BlackRock's tokenization fund that kind of came out of nowhere. I'm gonna be honest.
Yeah,
like,
watch our video that we made on that. Like
right here.
We knew RWAs was gonna pump, but it definitely came out of nowhere. I was not expecting that.
Yeah, no, it definitely came out of nowhere. So the bull case, just macro fundamental. I mean, it's pretty insane, guys. And we've been seeing some crazy gains in the RWAs that we hold already. And we're going to continue to see those gains. So yeah, guys, I mean, from a bullish standpoint, fundamentally alone, it's kind of a no-brainer at this point. And then when you're talking about real estate in an easing environment, it's kind of a no-brainer at this point. And then it fits into the RWA narrative. Then you have BlackRock. It's kind of a no-brainer at this point.
ETF. It's on
ETF, and it's built on ETH. It's kind of a no-brainer once again. And then the lack of real estate protocols that has figured out the regulatory side, once again, is kind of a no-brainer. So yeah, but I'll let my boy here carry us out because we're tired, guys, and we got more projects to research for you.
Yeah, guys, we've been talking about this for a long time before we started YouTube. Like, the future of purchasing real estate is fractional ownership. Instead of, having to be a large investor who has to buy a whole building or a whole house, eventually you're going to be like, oh, I just want to buy the room in that apartment. Or, if you own a whole apartment.
Fuck a room. I want to buy fucking 5% of the house. That's all.
Yeah, like let's say you own a hotel or you own an apartment and you only own one and you want to give it to your grandkids. Instead of having to pick which one you want to give it to, the most responsible one, you can give the most responsible one the most rooms. And then you can give the other grandkids one room here, 2 rooms there. Maybe you give the most responsible one the suite at the top or whatever. Shit, like, guys.
Yeah, man, that's crazy. Yeah, you can give them the entire house, have a smart...
I thought you were done, asshole. No,
you can give them the entire house, have a smart contract with a vesting schedule inside of it, and basically it trickles down to the irresponsible ones from the responsible one. I mean, you could set it up in any way you want, and that's the beauty of blockchain technology.
Yep. So, guys.
Bye.
This project is helping spearhead the future of how things are going to be. I don't know if they're going to be the winner in it long term, but I think in the short term, this cycle, they're definitely going to pump. So be on the lookout for that video on my channel.
Yeah, if you hold it, you will be the winner.
Yep. So with that, we thank you guys for tuning in. Let us know in the comments if we missed something. Let us know your thoughts. If you got value from this, we ask that you subscribe. And other than that, we thank you guys for watching. We're going to keep bringing the solid fundamental analysis to you. And we'll catch y'all in the next video very soon.